So how do I know I'm a panelist? Maybe just because I have video.
Yeah.
Nobody else would have video.
Your video is showing.
Okay. Okay, good. So one thing I would like to do is, so have you, that AWB thing, I emailed that to you this morning, like economic resiliency or something like that. And I asked, there's an AWB Friday morning 10 to 11 thing that we could put on our website as a resource. And then, so add that to the website if you would under resources. And because it's every week that they do it. And then the other thing is, if you wouldn't mind bringing your coffee, coming here, maybe while we're, I don't know when you want to do it. But so last night, Nicholas was doing homework until after midnight, and he was just coughing away, hack. And I couldn't sleep, and I was sitting there worrying about him. So I went, and he had asked me to help with his, he has to write something for his religion class, like how globalization is, something in the news is affecting globalization or religion. And so I helped him find something, and it was because everybody else has done things on coronavirus that we came up with writing something on tariffs, and then the religion piece, even Bibles have tariffs on them. So just, you know, throwing in something at the end about how even, you know, a lot of religious groups are trying to push Trump to modify the books, a tariff on books, because even Bibles will then have tariffs on them, which will reduce the amount of increased costs to religious groups and Christian groups and blah, blah. And so that would be the connection to religion.
Yeah.
But can you help him write it? I told him to go to bed. I said, I'll do it in the morning. Don't worry about it. It's got to be like less than a page. And he's got the 2 articles pulled up there, and he hates writing, and it takes him like 4 hours to write something like that.
Yeah, I can try writing a page.
Okay. I appreciate it.
It's a 1-page paper?
Yeah.
Okay. Yeah.
And it's not that big of a deal, but it just takes him so long to do something like that.
Yeah. Yeah, I can do that.
You don't mind?
Yeah, I'll do it.
You're good at that kind of thing?
Yeah, I'm okay.
Communications major. You're better than me. Put it that way for sure. Okay.
What time did he give the article done.
I told him I'd have it done before I woke up.
Yeah.
Yeah.
Did you see him the 2 articles?
Yeah.
Okay.
They're sitting there. Constant contact. So we sent that out, right? I don't need that.
Mhm.
I don't need to have that open. Okay. I don't need Graham's thing open. Graham's both a he's a CPA and an attorney.
Wow.
Yeah. So the Guardian, you know, that guy, Don Brazil, he sent an email out to Michael McQuay, and I got a phone call from Michael McQuay. I wonder if it's about that. And I said, so Don Brazil.
Is your mic on, by the way?
No.
No, it's not. Okay.
That's a good catch. Thank you. Because is anybody else on yet?
Yeah.
Oh, well.
Yeah, we've 4 attendees and you and yeah, 4 attendees.
So anyway, yeah, Don Brazil is he is sending emails to Michael McQuay and me, and I forwarded it to Brian Garrett. And Brian Garrett said, he wrote back and said, he's fucking relentless.
Good morning, Colleen.
Hi, good morning. We just wanted to let you know we're on live.
Okay, I'm just printing out a hard copy of my slides. I'll log it in here in a second. Am I going to have my own control of the screen?
Yes, you can share. You'll have, yep, you can share screen and we'll just be on mute. I've made a couple of people panelists to include Brian, you, me, and some of our business advisors. So they could potentially ask questions or potentially answer questions in some circumstances, but I'll do it quick and I'll leave it to you and you take it from there.
That sounds great. And I just want to make sure once I log on, participants, they can hear us as we're chatting, right?
Yes, correct.
Okay.
Yep.
I'm glad we have this call back.
Yeah.
I'm glad we have this call right now. That my screen may be shared.
Yeah, as soon as you share screen, as soon as you do a share screen, they'll be able to see it.
Okay.
Okay.
And I plan on turning my video off once they start the presentation.
Sure.
Just so people are focused more on what's in the slides instead of trying to watch the video or something.
And I'll do that too. After, and I'll tell, like prior to 10, I'm not worried about it, but then once we go to 10, I'll have everybody turn off screens. And also just so we have better bandwidth capacity.
Hey, that sounds great, Colleen. I'll be online in 2 minutes.
Okay, great. Thanks. Bye.
Yep, bye.
Hi, Brian. Good morning.
Did you sleep last night, Colleen?
I did. I got 8 solid hours. I'm very pleased. I feel a lot better.
That's good.
So I just got off the phone with Graham, and he said that he will be joining us in about 2 minutes, and that and he asked that once we start at 10 that everybody turn their video off as well, so people will focus on the slides. So told them we would do that, but
No problem.
we can all, butt in and ask questions, and I'll probably be following the Q&A questions, and I'll stop him and ask questions from the Q&A session as well, once we get started at 10, after 10 o'clock.
Did you see my email of 5 minutes?
Yes, I did. And I was talking to Ben here about it. Yeah, let him know your response. So, you know what I think we should be trying to assess too is for customers that have credit unions that are not participating, that's where they do their business banking. We need to make sure we can find banks that will take them on as new customers for these.
That is going to be a tricky question. Everybody I've talked to has been overwhelmed.
Yes.
I am trying to reach out to a bank of all places in Florida. That's one of the larger community banks in the country. And a friend of mine runs it. And they, Brad's company just put them on the program.
Okay. Also, Mark Lawrence, just, you don't need to respond here, but Mark Lawrence is a commercial banker, like he does loans. And so he's doing it out of Squim. And so that's something I'd like you to look into at another time.
He's not a lender, he's a broker. I've seen that website.
Yes.
So he must be sending them to some bank.
Yeah, but he is taking people that, right. So I think looking into that, so they can.
I can give him a call and find out what's going on.
That'd be great. That'd be great. Thank you.
I just want you to know that I did comb my hair this morning.
That's good.
My wife doesn't bother showering until way late in the day.
Really?
This has set up a whole new time schedule for people.
Yeah. The announcement of another, what was it, 6.7 million people filing for unemployment?
Yeah, 6.5 million people.
The feds put enough into the CARES Act to cover that?
Who knows? Now there's a fight in the Senate right now. They want to put another 250 million into the PPP program, and the Democrats blocked it because they said there wasn't enough money for hospitals, all this other stuff. So that's the latest blurb as of 10 minutes ago. So I don't know.
Hi, Mike. Good morning. Isn't that a nice backdrop you have? Good morning, Mike Rykoff.
Morning.
I like your backdrop.
Yeah, covers up my daughter's classroom that she was using, that I kicked her out of.
Okay. It's very soothing. I did talk to Graham. He said he'd be on in 2 minutes.
Okay.
And then he asked that once we get kicked off, the process will be, I will introduce at 10, introduce him. All of our business advisors were invited as panelists, so you can ask questions of him. And then, oh, I see Graham's on. Great. Hi, good morning, Graham. And Graham's asked that we all turn off our video once he gets going. But you can chime in and ask him questions, and I'll, Graham, read you questions as they come in through the Q&A. And I just told him that you asked that we turn off video when we start at 10 a.m.
Sounds great. Colleen, if you want to interrupt me for any questions that you think are relevant to the particular slide, I'll go ahead and just leave that up to you. I'm not going to try and review the questions during the presentation.
Yeah,
Okay.
I'll be in charge of that. But if it's all right with you, if Mike or Brian or Karen Affeld or Rick or Mike Skinner have questions, if they can also chime in while you're
Of course.
going, that'd be
Yes, definitely.
okay. Terrific. Thank you. And thanks so much for doing this.
Sure. Thank you, guys. This has been a great team effort.
I've talked to, after we're done with this, I'm going to shoot you an email. I talked to 2 large businesses that I think you ought to connect with. So I'll let you know.
Bless you.
Yeah.
Bless you, Brian. And maybe,
Yeah, I'm gonna put it on mute now. Sorry about that, guys. I got there, the sneeze came before the mute button.
And thank you, Colleen. That sounds great.
okay.
What a great couple days of beautiful weather up here on the peninsula, right?
I know. And do you like
Yeah.
Mike's background? I saw that and it made me happy just seeing it.
Where's that from, Mike? The background.
Oh, I don't know. It's, Zoom lets you do a virtual background, and I just went looking for some pictures that would be nice
Okay.
to have rather than. I told Colleen it's covering up my daughter's classroom that I kicked her out of when I had a telecommute. So
Okay. Do they have a virtual background for Port Angeles? Can you upload your own images?
you can upload your own images. I just got this one off the internet. So
Okay. Cool. Good to see you.
good to see you.
Colleen, I'm going to practice. I want to see where I hit. I know I can share a screen when I've set up a Zoom video. I'm looking to see. I don't see the same function right now on mine. I don't know if I need an invite resent to me with that kind of. Oh, wait, never mind. I see it. I see it. Can you guys see my screen now?
Got it.
Yes.
Yeah, no problem.
Okay. I just stopped it, but just wanted to check.
Okay, good. Yeah, it looks like so far we have 19 attendees and we still have about 5 minutes. I'll be right back.
Okay. I'm going to grab some water too. I'll be right back.
Okay.
we're back on, David. Okay, thank you. Hi, Mike. See, Mike Skinner has joined us. So I think we'll go ahead and kick it off. We do have, well, we have 44 participants right now. Why don't we wait just a few more minutes and let a few more people join? We are going to have this webinar recorded and it will be up on our website. So if people contact one of our business advisors, we can refer them to the webinar as a resource as well. Mike, do you know if Rick will be joining us this morning? Mike Skinner? Okay, well, I think we can kick it off. Good morning, everyone. Thank you for joining us this morning. We have today Graham Ralston, who will be for us on, and he will be addressing new procedures that and rules that have been announced through the SBA on the loans, particularly the Paycheck Protection Program loan. And we're really excited to have him provide very comprehensive review for us today. We do have different advisors that are joining us. Mike Rykoff from the Washington Small Business Development Center, which is funded through the SBA, and Brian Garrett, our board chair, who's a former banker with 35 years, sorry about that, Brian, 35 years of SBA lending experience, and Brian Koo, who's the EDC Executive Director at EDC Team Jefferson, and Mike Skinner from the Center of Inclusive Entrepreneurship. Let's see, so the process today will be, you should have a Q&A button at the bottom. If you will use that rather than the chat screen, that would be great. And our business advisors and I will bump into the conversation on each slide that Graham goes over in case we have some questions about his review. And so please use that and we'll try to get all of your questions answered. So I'm going to go ahead and turn off my video, and Graham, I'll let you take it from here. We're really lucky to have Graham doing this for us. Not only an attorney, but he's also a CPA, and he worked in DC with the U.S. Department of Transportation in the small business and minority business office, creating policy and the like, and did presentations all across the country for people on how they could participate in the US DOT programs. So we're very lucky to have such an expert in our community and providing this webinar for us today. So thank you, Graham. I'll let you take it from here, and I'm going to take my video and go on mute.
Thank you, Colleen. And the sentiment is shared. We're all lucky to have such a great leader in Colleen and the Clallam EDC here in town. We've been communicating on Sundays, and the rest of the advisors of everyone that we have here in the community, helping to support the economic development here in Clallam County. I'm going to go ahead and turn off my video, and that way we can all focus on the slides, which I'm sharing now. All right. Colleen, just to make sure, are you able to see the slides? Because I have the chat closed now.
Yep, it looks great.
Okay. All right. So today's presentation, everyone's heard a little bit already on the Paycheck Protection Program. This is a little bit more of an advanced strategy within that program. In addition, we haven't talked about or discussed the employee retention credit under the CARES Act, which is a tax election strategy. But it's important to note that businesses can only take advantage of one or the other. And as Colleen shared a little bit about me, I consider myself a solution-focused problem solver. Being an attorney and a CPA are additional tools to help solve your problem. I'm born and raised here in Port Angeles, and my family has a 120-year history up here on the peninsula. And I'm happy to have moved back here at the end of last summer and partnered with Steve Moriarty here in town. My focus is on business law, probate, estate planning, tax, and real estate, with offices in Port Angeles, Sequim, Port Townsend, and Seattle. As a disclaimer, this presentation is not legal advice. Please seek advice from your attorney for professional counsel. Guidance, as we know, and I'm going to talk about in the next slide, is changing consistently right now. So please make sure you continue to update yourself on any of these changes. And I know the team that's been working with Colleen, we've been doing our best to try and get those changes back out to the community. Two of those significant changes in Treasury are issued in their frequently asked questions. I put a link directly to those FAQs, and also where you can find updated guidance from Treasury, where they're putting all these new updates on a daily basis. But the two most significant come from fact number 16 in that question Q&A from Treasury, which is that the borrower can now include federal payroll tax into its payroll cost calculation. That includes your FICA and federal unemployment. And fact 20, that the lenders must make their first disbursement of the loan no later than 10 days of SBA approval. Been working with some clients on advanced strategies of pushing out the loan origination date, which could make it more advantageous for the business. There's still, of course, the 10 days of flexibility, which we'll cover in this presentation, but this is a change as of yesterday in terms of how you can properly plan for this Paycheck Protection Program. So first, we're going to go into the PPP. What we know is that there's approximately $350 billion program cap that is 100% guaranteed by the U.S. Small Business Administration. As of yesterday, I'm seeing that approximately 80 billion of the 300, I'm just going to call it 350, has been processed by the Small Business Administration. That doesn't include what the lenders have seen applied for. That's just what has been processed by the SBA. Applications to your SBA approved lender are due by June 30th, 2020. However, I recommend applying as soon as possible or by April 10th, 2020. It is a first come, first served program, and the Treasury Secretary I saw is trying to obtain an additional $250 billion for the program. But there's no guarantee that there's going to be funding beyond April or beyond this week or next week. So try and make sure that you're staying updated and getting in your applications in a timely manner. Businesses will receive up to 2.5 times their average monthly payroll expenses for the prior year, and the loan forgiveness period allows up to 8 weeks of covered expense payroll, rent, and utilities, with a 25% cap on rent and utilities. The most common question I'm receiving from many of the small businesses on the PPP is, what exactly is calculating payroll? Well, that's salary, wages, commissions, or similar, up to $100,000 per individual, but prorated, that comes out to be about $8,300 per year or per month. Benefits above $100,000 are included, but not cash similar compensation. This means if you have an individual who is paid $150,000 or an owner, you would be limited to the $8,300 month cap. However, your retirement benefits or your medical can exceed then the $100,000 cap. Vacation, parental, family, medical, or sick are included. Employee benefits, including group health and the medical premiums. And then, as we mentioned a couple slides ago, that federal taxes are now applicable, but also state and local. How to calculate loan amount? You're going to aggregate your payroll costs and find the monthly average. If you're a seasonal employer, you can take an election from February 15th, 2019 through June 30th, 2019. And I encourage businesses to run both reports, especially if you can make that seasonal election. You want to take the higher amount of your monthly average to increase your loan size, and you want to increase that loan size so you have a higher forgivable amount of balance. And once the loan is approved, it's set for 2 years with a 1% maturity, or I'm sorry, 2-year maturity with a 1% interest rate. And you're only going to have to repay the amount that is not forgiven in that 8-week period from the loan. And what goes into that 8-week period of forgiveness? You're going to calculate your payroll cost. And then now you get into forgiving rent and utilities. Rent and utilities do not go into the initial calculation. When you're doing that initial calculation, that is 2.5 times your monthly payroll, which is 10 weeks. The forgiveness period is only 8 weeks. So that 2-week difference gives a little buffer to now include in your rent and utilities. However, that is capped at 25% of your loan forgiveness. So if your loan was $100,000, you'd be capped at $25,000 for rent and utilities. There is no cap on payroll costs. So if it's a $100,000 loan, you could forgive $100,000 of it from payroll costs. Make sure you are keeping great records during your 8-week forgiveness period. You will be required to submit documentation for your payroll costs and your rent and utilities for what you're seeking to have forgiven from your lender.
Quick question for you, Graham.
Yes.
On the calculating your payroll, sick leave is not a guaranteed that would be earned during this time. It's not guaranteed, but like vacation and stuff are. Should you include the earned sick leave into that calculation, or?
Not earned sick leave, but if someone uses sick leave in that during the forgiveness period, then that should be included in payroll.
And then, but earned vacation, should that be included?
Yes.
Okay.
Good question. In advanced strategy, something we were discussing before the Treasury decided to change the rule yesterday is pushing the origination date maybe a month or two past the time that you would receive SBA approval on your loan application. Now we know that it's a 10-day period. So you are going to need to weigh the risk of, do I apply right now if my business is completely shut down? Or do I try and delay the actual application with my lender, which then you run the risk of whether or not there's actually funds left over for the SBA to guarantee. I'm still recommending, because of how beneficial the loan forgiveness is for our small business owners, that you try and move forward as quickly as possible in this process. Once you are approved, though, I encourage you to work with your lender, especially if you're not open or you have decreased operations, and if your employees and you potentially are receiving unemployment and your payroll costs are being covered and your employees are being taken care of, that you look at stretching your origination date to the max of 10 days. For example, if you're a construction company and you're shut down right now, bringing everyone back from unemployment to put on the PPP payroll forgiveness as part of your payroll costs is less advantageous than if you were to potentially wait 10 days, getting closer to that May 4th deadline from the governor. At least right now, that's what we're working with. There's also no guarantee that the governor can extend that to a date further in the future. So pushing your origination date allows you then to be back in the process or closer to generating revenue and profit as a business owner. So now the small businesses, now the employees that are on your payroll costs, that forgiveness amount is coming back as profits to the business and helping to make up for some of those lost profits and revenues while we've been shut down over the last month.
So Graham,
Yes.
if you could go back 2 slides, we received a question from Bill Breger, and then he also has a follow-up question.
Okay.
Payroll costs still include net income for sole proprietors up to $100,000 as previously indicated.
Yes.
Okay. And then his follow-up is also, is that forgivable?
Yes, that is forgivable.
Okay, so can you briefly, there's a lot of sole proprietors, independent contractors that had planned on getting the $10,000 from the EIDL loan process as an
Sure.
emergency grant, and now we found out that the SBA guidance is that it would only be $1,000.
Right.
Which, by the way, our legislators, our congressional delegation are past perturbed about that, their intent. So we'll see what comes of that. But so can you give an example or go over how a sole proprietor that has an LLC, perhaps that it's just passed through, how their income that they've been receiving would be considered in this payroll protection program calculations?
Yes, great question, Colleen, and I'm happy that you brought that up. So early on, we talked about 2 of the changes, at least as it related to the PPP. And as Colleen mentioned, many of you applied for the $10,000 grant underneath the EIDL. And as she mentioned, that's now changed. So if potentially you may only receive $1,000 now underneath that program, it may be more advantageous for you to apply for this Paycheck Protection Program because we were advising previously that if you may only qualify for $7,000 under this program, that it probably doesn't make sense for you to apply for it because you were going to receive $10,000. So that is a significant change, and now many more are considering this program. And the second part of the question is, how does that look if you're an independent contractor or a pass-through LLC, and how do you come up with that calculation? Well, even though the tax deadline has been extended for 2019, it'd be important for you to finalize your taxes. The reason why is I'm recommending to businesses that I'm working with that to calculate what your net earnings were as an LLC or as an independent contractor and what you paid taxes on in 2019, if that total amount was $80,000 of net earnings, you're going to average that out over a 12-month period, unless you're a seasonal business, which you can make that election. But if you're averaging out your net earnings over a 12-month period, what is that? Close to $6,000 a month would be your average. So now you'd be looking at 6,000 times 2.5, which would come out to be $15,000 that you'd be eligible for the Paycheck Protection Program. However, here's another example. If your net earnings were $24,000 as a sole proprietor or an LLC, we know your monthly average is now $2,000. So at 2,000 times 2.5, you're now eligible for $5,000 under the Paycheck Protection Program, compared to if you would have only received 1,000 now underneath the EIDL program. My understanding is that still, if you receive the $1,000 grant in advance and you apply for the $5,000 Paycheck Protection Program, that the $1,000 advance is still going to be taken out of what could be forgiven. Colleen or other advisors, have you seen anything differently or heard anything differently about because the EIDL loan has changed, if that's changing any kind of coordination between the forgiveness amount?
I have not heard anything. Mike
Okay.
Wyckoff, have you?
No, I haven't heard anything. But any money that you would get from the EIDL program that you would use for payroll, you're supposed to refinance with the PPP loan if you get the PPP loan.
Right, exactly. So that's now a new scenario that would, because the EIDL loan amount has changed, or the advance, now there's more businesses where the PPP is going to make sense for. Colleen, did I hit the main questions that you asked and address those changes?
I think you did, Graham. Thank
Okay.
you. We have two more. We have two more now for you.
Okay.
Yep, three more. Patricia Baker asks, how do new hires fit into the PPP loan? Do we get to count them as headcount, forgiveness, etc.? How do we handle the 75% prior earnings? Is overtime allowed under PPP? Is past due rent utilities allowed under PPP forgiveness?
Okay, let's break that down into, can you read me one question at a time within there?
How do new hires fit the PPP loan?
New hires would count as part of the overall head count, but if you hired them in February or March, they would not go into prior calculation of your payroll costs. There is an exception to, I know we discussed average monthly payroll for last year. If you're a new business and you weren't around for all of 2019, but you were existing prior to February 15th, 2020, you'd use January and February to calculate your monthly payroll. So to get back to that question, Colleen, that new employee does not factor into payroll costs, but they would factor into headcount in the forgiveness period.
Okay, so that was the next. Do we get to count them as headcount, forgiveness, etc.?
Yes.
I think you covered that. How do we handle the 75% prior earnings?
I'm not quite sure what the 75% prior earnings means.
So there is the 75% rule has to be spent on payroll, and then the 25% can go to rent and utilities, etc.
Well, you can do 100% of payroll in the forgiveness period. So there is no cap on what you can have forgiven under payroll. There is a cap on rent and utilities of up to 25%.
Okay, thank you. Is overtime allowed under PPP?
My understanding is that yes, overtime is allowed. And when clients have asked whether or not they could bonus employees, I'm recommending that they don't write or look at giving employees bonuses and reporting that and asking for forgiveness. I think it's better to leverage additional hours or overtime.
Okay, is past due rent utilities allowed under PPP for forgiveness?
Past due. There is some exceptions for obligations, interest. Let me follow up on the exact language for that, because there is some kind of exceptions for some past due amounts or interest on mortgage if they were incurred prior to February 15th, 2020. I don't have the exact language, but there is some kind of exception there. So let me follow up and let's get her email and we can follow up on that question.
Okay, will do. Next, Sarah Nichols says, can we apply for the PPP if we have already applied for the 10K and not heard yet?
Yes.
Okay. Next is from Arndt Spieser. For new businesses in 2019 operating at a loss for the year, is there any way to apply for PPP?
For new businesses operating at a loss, yes, you would still include your payroll costs. It's not necessarily just based on your net profits, unless you're an individual sole owner and you didn't have any employees and you're not paying yourself a salary, then no, you would not be eligible, or you'd be eligible, but you wouldn't have any loan amount under the PPP, so it would not make sense for you to apply.
Okay. Next is if you already applied, and this is from Linda Middleton, if you already applied for the EIDL program and you can't apply for both programs, how do you apply for the PPP one now?
You can apply for both programs. You just can't apply for the employee retention credit, which we're going to talk about in the second half of this presentation. So you can apply for both the EIDL and the PPP.
Okay.
And the key on that one is that if you get money from the EIDL program and you use it for payroll, the PPP should be refinancing that portion of it. And that's something the banks should be familiar with. You just need to let the banks know that you got money from the EIDL program that you use for payroll.
So what if you haven't though? What if, you know, tomorrow I'm putting in my application. I've made the application to the EIDL loan, and I don't know if anybody's received any $1,000 or $10,000 from EIDL. So are they going to assume, and say with the PPP program, I should be able to receive $15,000 or $25,000, and then, but they have not determined how much money I'll receive from the EIDL program. How will the banks handle that?
That's a good question. Yeah, I don't even think that the Treasury or the SBA has gotten there yet either, Colleen, unfortunately, to give us a direct answer on that. I'm still working off that if someone gets an EIDL, let's say for $2,000 and their PPP is $15,000, that if they receive they were supposed to receive the EIDL in advance, and then once the PPP comes around, they'd only be limited to forgive $13,000 instead of the full $15,000. That was my working understanding until they've made some of these changes to the EIDL, and I haven't seen any new guidance on how the two programs are connected.
But they could, am I right that they could, one of the things was you could not apply for the PPP loan while your application was still pending for the EIDL loan. So
I don't believe that's true.
It's no longer true?
No.
Yeah, the SBA has definitely issued guidance that you can be eligible for a full EIDL loan now in addition to the PPP. However, your PPP should be used for payroll costs and the idle can't be used for the same purpose, which is Mike's pointing out, if you're using the idle loan for payroll, you can't use the PPP for that same purpose and you'd lose your forgiveness amount. So you wouldn't want to do that anyways. You'd want your PPP to be focused on what could be forgiven first and use your idle to supplement what your PPP can't already cover to have forgiven in this process.
So there's really two aspects to this. It's how much money can you borrow, and you could have incremental amounts from the two programs, but the amount that is forgiven is one is subtracted from the other.
That's my understanding right now, at least for the idle advance. For the full idle loan, one is not subtracted from the other. That's only on the up to $10,000 idle advance is subtracted from what could be forgiven in the PPP total amount.
Okay, so this is from Art Spencer. I'm sorry if I'm saying your name wrong. The follow-up would be for sole proprietors who were not using the business as primary income. Would you have to apply based on whatever was only earned through business pass-through? We're not.
Whatever was only earned through, if it's a business and it's a pass-through, yes, that's the only amount that you can report. It's designed to look at what you made payments of payroll tax on in your taxes. So up to that extent.
Okay. John McNamara asks, if a business changed hands through an asset sale in March, can the existing business look back at the previous owner's payroll for the basis, assuming same schedule and employees?
Good question, John. And we haven't seen any guidance on that yet. So I would just be speculating on any kind of answer at this point.
Okay.
I don't know if anyone else has seen any of that guidance come out yet. Have any of the other advisors?
So the SBDC network asked that of the SBA director in Seattle. Her guidance was to go ahead and use the prior year from if the financial statements are available to calculate what the payroll amounts were. Although she was going to look into it and get a more definitive answer, which I have not seen yet.
Thank you, Mike.
Thank you, Mike. So, and if you do receive an answer to that, Mike, if you can let us know and we'll put it up on our FAQ section. I'm sure you're going to have it on the SBDC website as well, but it off to us and we'll add that to choosecolumnfirst.com, and under business resources, there's an FAQ piece. Okay. Next, Bill Brager. The bank makes the decision on loan forgiveness. Can we count on that happening if we do our accountability?
Our accountability, if you're documenting your payroll costs, then yes, you can count on the bank to forgive that amount.
Okay, this is from Rose.
Well, I'll follow up on that, Colleen, real quick, is that, and I don't know if you're going to get to this, Graham, but these loans are going to be purchased by Treasury within a couple of days of the notes being finalized. And so the loan actually will be owned by Treasury, and that's will make the loan forgiveness. The bank will just be processing the loans. They'll be what do they call it, managing the account, but they won't own the loan a couple of days after the note's signed.
Okay. Thank you, Mike.
So, and this is from Rose Thompson, and this might be something for you to answer because I know you were very involved with these applications early on. Is there any truth to a rumor that idle applications that came in before April 1st have been wiped? We applied March 30th and haven't heard anything. So I
haven't heard anything along those lines at all. The only thing that was put forth is if you applied prior to March 30th, you should reapply because those applications before March 30th did not include the option to select for the up to $10,000.
So, yeah, if it was March 30th, I think, was that Monday when it opened up? Is that
Yeah,
right?
Monday, March 30th is when that opened up the new application
And
process.
I don't think, Rose, you're alone in this. I know of a lot of
No.
people that applied beginning March 30th, and I know just of 2 people that have received phone calls from the SBA on their EIDL loan. And, but since then, guidance has changed that they assumed it was going to be $10,000, and now new guidance is $1,000 per employee. So, but the process that we've been told they are going to follow, and correct me if you have heard anything different, is that you'll receive a phone call from the SBA with a follow-up email confirming the conversation, and funds should be deposited in the account. But they've just been so overloaded, they just don't have the bandwidth to get through all of the requests.
Colleen?
Yes.
Yeah, this is Brian. One strong suggestion I would recommend on getting the refunds is if you receive an EIDL loan and or a PPP loan, is to open separate checking accounts. So as you disperse those funds, the records are much easier to maintain. So when you make your request for a refund, it's all very straightforward.
Okay, thank you.
That's a great recommendation. And Colleen, I'd like to, I know I can see that we're receiving a lot of Q&A, and I'd like to be able to make sure we get through the presentation, and then we could potentially go back to just general questions towards the end of this.
Sure, sounds good.
Okay, okay, thank you. So last slide that we covered was the advanced strategy and looking at scheduling your origination date. You need to be proactive with your lender. If you're wanting to extend it for the full 10-day max right now, if you're wanting it to be closer to May 4th, if people are on unemployment. And why would people want to be on unemployment right now? Well, some employees that are already eligible for unemployment may be eligible for an additional $600 per week from the pandemic unemployment insurance. This is paid by the state, but reimbursed by the federal government. So you can look at that as part of your overall strategy of how you're going to make sure that your employees, or potentially you as the business owner, are still making money to provide for your family and provide for your employees until business is back where it needs to be. So I know that the focus of this presentation is on PPP and the employee retention credit, but unemployment is also a key factor as you strategize as a business owner. And there are other recorded webinars where we've brought up unemployment insurance. So we're not going to jump into any detail here. Instead, we're going to go ahead and move into the employee retention credit underneath the CARES Act. There's a link to the IRS for some of their facts on how this program works. And a lot of the information in here is from that site. You can only participate in the PPP or the ERC. So you'll need to make the analysis on which program is better for your business. What is the employee retention credit? As we discussed, it's part of this overall CARES relief package. And in one of the first webinars that the EDC did, we did discuss the Families First Coronavirus Relief Act. You cannot receive this credit in addition to the FFCRA for the exact same employees on the covered period of time. Well, what is the employee retention credit? It's a fully refundable tax credit for employers equal to 50% of the qualified wages. And that starts for wages paid after March 12th, 2020. And it's 50% of qualified wages, which we'll discuss what qualified wages are, for all calendar quarters is up to $10,000. Therefore, a maximum credit for an eligible employer for qualified wages paid to any employee is $5,000. It's important to note what the difference is between a tax credit and a tax deduction. If you have a tax deduction of $5,000 and your total amount that you would owe is $2,000, you would have a net zero. You wouldn't necessarily receive a large refund. If you have a tax credit of $5,000 and a tax of $2,000, that additional $3,000 would be returned to you from the IRS. So it's important to note the distinction between a credit and a deduction. Who is an eligible employer for the ERC? Eligible employers for the purposes of the ERC are those that carry a trade or business during the calendar year 2020, including tax-exempt organizations that either are fully or partially suspended operations during any calendar quarter in 2020, or that experience a significant decline in gross receipts during the calendar quarter. Well, an example of a partially suspended business is that a state governor issues an executive order closing all restaurants, bars, and similar establishments. So under this guidance, our interpretation is that if your business was not considered essential and you're shut down, you would be considered a partially suspended business. Therefore, you qualify, going back one slide, underneath this first set of criteria. Now, the second set of criteria, a significant decline in gross receipts to qualify you, is you'd have to do a calendar quarter by quarter comparison from 2020 back to 2019 to see if you had a decline of 50% of gross receipts compared to a previous calendar quarter in 2019. There's a little bit more additional analysis that goes into this. We're not going to spend a lot of time on that, but I'm at least making you aware of something that is potentially available to you. How is the credit determined that 50% of up to 10,000? Well, that can include any amount after March 12th from these quarters, but a max of up to 10,000 in compensation for the entire year. So it's not per quarter. So as you see in example 2, if an eligible employer pays an employee $8,000 in qualified wages in Q2, and then $8,000 in qualified wages in Q3, that the employee or the employer would be able to claim a credit for $4,000 in Q2 and $1,000 in credit for Q3. Why is it important to be looking at per quarter analysis? Well, the IRS is refunding some people on a per quarter basis, and there are some forms that you can fill out to actually have the IRS in a way finance or allow you to float any kind of payroll tax if you're expecting or projecting in future quarters that you are going to be eligible for this credit, that you could then float or delay some of your payroll tax obligations. What are qualified wages? Well, the most important distinction here is whether or not you have 100 employees within your organization. So if you already meet the eligibility of a full or partial suspension or a significant decline in gross receipts, then eligible employer who averaged 100 or few full-time employees in 2019, any wages paid to that employee are qualified. If you averaged over 100 full-time employees in 2019, then you would only qualify for wages of employees who are not providing services at that time. So if you're looking to keep people on your payroll, if you have over 100 employees, please feel free to reach out to me, and you could do a little bit of an analysis to see if any of the employees are employed through a separate LLC, or if you could somehow get that number underneath 100 to have a little bit more flexibility. But I believe the majority of people, probably 90 to 95% of you on this call, have under 100 employees. And when you're making the analysis on PPP versus the employee retention credit, there is more narrow eligibility requirements for the ERC compared to the PPP. However, there's greater flexibility for the timing of the ERC compared to the 10-day origination of the PPP. So an analysis that you should be doing as a owner of your business is, especially think about this if you're a restaurant. Are my sales going to be back in May? Are they going to be back in June? How is what we're going through going to affect my business moving forward? And if my drop off is going to continue to be so significant in May and June, and I'm forced to be on the PPP within 10 days, and I'm bringing people back for basically a net zero, meaning that your payroll costs are forgiven and you don't have that much of a margin, does it make more sense for everyone to be on unemployment for a longer period of time and opening up operations where you can have more profitability and instead leveraging the ERC as a different strategy? If PPP may make more sense for people that are still having ongoing operations where they've only been limited, had limited effects, or maybe they're expecting to be back to full operations like many construction companies back closer to May 4th. So this is an analysis that each independent business owner is going to need to do. Underneath the ERC, it is important to note too, I didn't put this in my slide, but the owner is not eligible for this credit. So if you're an independent or if you're a sole prop or you're an LLC, then your net earnings that would be eligible underneath the PPP are not eligible for the credit underneath the ERC. Well, a few last slide additional thoughts is that you share this information with also your independent contractors and businesses that have accounts receivable with you as a hedge, not only to make sure more people are taking advantage of these programs, but that people will, it's a way to protect your accounts receivables, to make sure that businesses are still around to pay you. Make sure you're staying healthy, staying composed, and thinking rationally and not out of fear. Make sure you're taking care of yourself physically and mentally to be at the best for yourself, for your family, and your company. Your businesses are only as good as the individual that runs them and the employees working there. And now we'll go back to more questions, Colleen.
Okay, we have lots.
All right.
All right, it looks like the next question is from an anonymous attendee.
You're cutting out a little bit, Colleen.
Just a minute here.
Okay.
Or will somebody else ask the question for me?
Sure, I could go ahead and read through them and take the first stab at reading them. So. I don't know why that happened. All right. Bill Brager asked, thank you, Colleen. Also, is that forgivable? If you're talking about the EIDL, Bill, if your question went back to that period, yes, the EIDL, the advance, my understanding is the advance does not have to be paid back. But if you were to take out a full EIDL loan, which is different than the 10,000 advance, that is not forgivable. Do any of the other advisors have any different guidance on that? Okay. Patricia Baker asks, how do new hires fit into the PPP loan? Do we get to count them as headcount forgiveness? Do we handle, I think actually we already answered that question. Can we apply for the PPP if we have already applied for the 10K if not heard? Yes, you're encouraged to do so. We answered that. Maybe what I'll do is start at the bottom and work my way to the top. A little song reference. What is the relationship between the state of Washington EDC grant loan, if any, between these programs? Will Payne. I'll actually turn this one back over to Colleen, who I know is the expert on Washington grants. If she's back with us.
I think we eliminated that echo. There is zero relationship between the two. You can apply for both and one will not affect the other at all. And we will have community development block grants available to entities that have a household income of 80% or less of the area median income. For it's about $55,000. For just Jefferson County, it's about $59,000. We anticipate that those will be announced probably in 1 or 2 weeks, probably closer to 2 weeks. So beyond the Working Washington Small Business Emergency Grant, there will also be the option for these CDBG or Community Development Block Grants, and they have no impact whatsoever on your ability to apply for an EIDL loan or a PPP loan.
Now, Colleen, on the EIDL loan, they do ask what money you have gotten from state or local in the forms of grants, and they use that in the calculation of what is the money that you need to get through to the 6-month period that they're looking at for your business.
Okay, good to know. Thank you, Mike. So if they receive funding though after they've applied, then and they won't know for 4 to 6 weeks though if they've received any funding, and presumably the EIDL loan will be processed prior to that. And in the Working Washington application, we are hoping that everyone that's applying for those funds will be receiving funding from the SBA, and are encouraging everyone to apply for those funds.
Okay, let's go ahead and go up to David Booth's question. Great question. There is some analysis on which FTEs you bring back, but should there be an analysis on part-time and seasonal employees to increase the numerator of this fraction? I'm still looking for additional guidance and maybe an FAQ from Treasury on how this is exactly calculated. It's not completely clear to me, so I can't give you a direct answer. Does anyone else, maybe Mike from your SBDC group, have you guys received any additional guidance from the SBA on this?
I'm just reading through the question.
Sure.
So on the calculation during the 8-week period, I think they are going to just look at what your FTEs are, which is basically 40 hours a week for the 8 weeks. And they want you to be up to the point where you were at least on February 15th. For seasonal workers, they're going to clearly exceed that because you're going to look back at the same period from the previous year in 2019 for the dollar amounts and also for what the hours are that would be worked. Is the closest I think I can get for additional information on that.
Okay, thank you, Mike. Katie Whalen asked, do we include our 1099 recipients in our 2019 payroll calculations? No, you do not include those payments. Sarah Nichols asks, if we are using the EIDL for other expenses, not payroll, can both be forgiven? No, only the PPP loan is eligible for forgiveness. However, when you're talking about I know that this gets a little confusing. There's kind of 2 types of the EIDL. There's the advance of the $10,000 grant, and then there's the traditional EIDL loans. So if you're talking about the $10,000 advance, that can be forgiven, but not on top of what's forgiven underneath the PPP. My understanding is if your PPP is $15,000 and your EIDL advance is $5,000, you would now only be eligible to have $10,000 forgiven underneath the PPP. Continue checking back at treasury.gov and with the EDC for updates on that, because it's not completely clear to me if they've made any additional changes there, but that was the existing framework. Dale Dunning asked, to be clear, I'm an LLC with normally 25 employees. I am paid with draws. Is that draw amount allowed to be included in the forgivable portion of the loan? Yes, to the extent that it doesn't, to the extent of $100,000 a year, that's allowed to be included in the calculation. So that would be prorated at $8,300 a month, approximately. What lenders are doing this, and can vacation rental owners apply? Banks don't seem to know. Well, if your vacation rental is ending up on your Schedule E for tax reporting, then you're not making payroll tax on it. And you should not then be using any kind of pay as a business for this process. That's my understanding. If you're running this as an overall business and you're making payroll tax payments as a Schedule C business owner, then you may be eligible to apply. What lenders are doing this, if you go back to Treasury's website, they do have a lender finder where you can search for lenders in your area. And in addition, I think the EDC is posting, either lenders or the SBDC is. I'll let them quickly jump in and say where you can find those lenders at through their sites.
So, oh, I got an echo here. I'll let Mike respond, but we are posting it under resources under chooseclallamfirst.com and then business resources. And we've got a resources tab there that you can go to. And as we receive new information, we're posting it there. The next step is to find business, and most lenders in our area are doing these PPP loans. They're at different stages of accepting applications. Of course, some are accepting applications, but they're not able to process them with the SBA yet. Others, was told First Federal expects to be able to process those today. Yesterday on a meeting, Christine Walsh Rogers, who's the project lead for First Federal, said that they would be actually submitting those to processing them through the SBA starting this evening. And what we're trying to identify now is what businesses in Jefferson counties, what lenders in Jefferson and Clallam counties will accept applications from people that do not currently bank with them. So we're trying to get that information out, and you can go to the resources page at Choose Clallam First and we'll post it there.
I would also add for the vacation rentals, they are eligible for the EIDL loan, although not the PPP.
Okay. Thank you, guys. Anonymous attendee, I think the earlier question about reducing to 75% was meaning that the amount of loan forgiveness under this section shall be reduced by the amount of any reduction in total salary or wages during the cover period that is in excess of 25% of the total salary or wages of employee during the most recent full quarter during which the employee was employed before the covered period. This is something where I'd hope that the Treasury would also give us some additional examples which are helpful to see how they're actually applying that in each scenario. And I think we already addressed Rose Thompson's question, so now we can go ahead and scroll back down to, I think David was the first, no, Will Payne was, so now we'll start with Jack and move down from here. We have already applied for the PPP, but now I'm thinking ERC might be better. How do I apply for the ERC? The ERC requires no application. This is a tax credit that you can elect to make. As long as your PPP has not been processed by or has not been processed by the SBA, you should be able to withdraw an application. And the ERC, because there's some functionality in elections that you can make on a quarterly basis, you don't need to necessarily wait until 2021 to start seeing some of the benefits, you can make some of those elections on a quarterly basis to see those benefits now. For the head count, does it matter if they are the same employees or new employees? I haven't seen anything that says that they have to be the same employees. Has anyone else? Has anyone seen guidance on that? Any advisors?
No, they don't have to be the same employees. It's,
Okay.
they recognize that there may be some turnover and you might have to hire some new people.
Okay, thank you. And Tad asks, if the employee count is less than the average for last year, will that reduce our loan amount proportionally, or will that reduce the percentage of loan that can go into payroll? To answer it first, it will not reduce your loan amount. Your loan amount is based on last year. What it could potentially do is reduce your loan forgiveness amount, but it doesn't reduce the total loan amount. If the funds that are not spent at the end of 8 weeks, do those dollars have to be returned, or can they become part of the 2-year loan program? They can be part of the 2-year loan program. And my understanding, the Treasury not in their facts, but in part of their fact sheet for understanding the loan process, mentions specifically that it doesn't say must, but I believe it says may or should be used. I think the key word is should be used still for payroll, rent, utilities, the same things that are eligible for forgiveness. The SBA or Treasury guidance is saying that that loan, that the portion where it's not forgiven should still be used for the same purposes after the 8-week period, where it's now a term of 2 years, but now it's just not a forgivable amount, and should doesn't necessarily mean must. So there is some gray area there that I'd expect some additional guidance from Treasury on that. So stay updated.
I would also add to that, Graham, that there's no prepayment penalties on these loans. So if you would want to use those to pay it off earlier, you can do that as well.
Yeah, great comment, Mike. Thank you. Husky or Cougar? Husky, go Dogs. If the loans are forgiven, are we still responsible for interest for the 8 weeks, or is all forgiven? Responsible for the interest? Is all forgiven? Good question. I don't know the answer to that one off the top of my head, so that's something I can follow up with you, unless Mike or anyone else, do you guys have the answer on that?
Graham, from some conversations I've had with some bankers, they were talking about the limited interest they were going to be making, and they were assuming that the interest began from the time of the loan origination date.
Okay.
That would be very small.
Yeah, if your loan is $100,000 and the interest rate, that's 1% for the year. So you're looking at 1%, that's close to, we'll just say 0.1 on $100,000. You're talking about $100 or $200 for 2 months of interest that you would be responsible for, which is very minimal when you're talking about how beneficial this program could be potentially for your company.
So Graham, there was one more question from the chat box, and from Lynn Murphy. She says, I have a VRBO Schedule E and a business, I think a C Corp. Can I apply for 2 separate EIDL loans, even though they're both identified by the same Social Security number? And I'm not sure if it's a C Corp, but she has a separate business where she files with the same Social Security.
2 separate EIDL loan applications for the $10,000, but they're underneath the same social. My understanding is that you could only apply for as using one social. If you had 2 separate tax identification numbers for different entities, my understanding is you could have 2 EIDL loan applications, but where you're sharing a single one, you could only have 1 application. Does anyone else have different understanding there?
So if you have two businesses that have the two tax numbers, you can do the two idle loan applications, but the advance, the $10,000 advance is going to be tied to the social security of the owner, and they'll make sure that that does not exceed $10,000 total.
Okay, great feedback. Thanks, Mike.
Thanks, Mike.
And last one I saw, Bill must be a cougar.
Looks like the last question, Patricia Baker, for an employee who's paid over $100,000 per year, how does this fit in forgiveness and allowed expense?
So for an employer who's paid over 100,000, you're going to take the prorated amount, which ends up being approximately $8,300 a month. And if there was only one employee and you're the employer and you're doing a 2.5 times calculation, your loan amount would be approximately $20,000. That's 2.5 times the 8,300. And then you'd also then do, in the loan forgiveness period, you'd have 8 weeks in which your current, your continued pay could be prorated at $8,300 a month, which, because the calculation initially ends up being 10 weeks and your forgiveness period is really only 8 weeks, you'd be forgiving about a little more than $16,000 of your $20,000, but you could also then put in rent and utilities if that's applicable.
Okay, it looks like we've got through the questions. And we're at 11:06. So if we don't have any further questions, I think we will wrap this up.
Well, there's a question in the chat there right at the end from Lynn Murphy about checking on the status of your loan. On the idle loan application page at the bottom, there's an email for that you can send that question to on what the status is, and you can call the phone number, but understand that they are really overwhelmed. And if you're going to call the phone number, you maybe be on hold for a couple hours before you get to talk to someone who can check on the status. Do know it's going to take longer than the 3 to 5 days they initially said for them to get to that point of letting you know. And it's always been 2 to 3 weeks for the loan portion of the idle application.
I would just add to that, this is Richard. I would just add to that, Mike, that what we're hearing from our clients who are sitting through that call is that when they ask for status, no one's actually able to give them a status. So there's really not much value in calling. So okay. Mostly I think it's just a wait until you hear from them. And that's at this point most likely, correct me if I'm wrong, I think most likely going to be an email at this point. I don't think they're trying to do initial phone contact with everybody.
That's what the SBA director in Seattle thought as well.
Okay, great.
Oh, you did that? Yeah, sorry. Sorry, I'll be done in a second. No, you're good.
Well, thanks everybody. This was really good. Sorry I was late.
Oh, don't worry about that. I am also posting here under the chat where this presentation is going to be posted online. And we're going to have it done there. There it is, chooseclallamfirst.com, recorded webinars. We'll have the webinar that you can listen to at that site here within just as soon as we, and then also we'll have, if it's all right with you, Graham, we'll post your slides under our document download section.
Yes, definitely. And I just want to reemphasize to people, this program continues to change. So what we're sharing today could unfortunately change later today or tomorrow. I've heard many of you may have heard the expression before that sometimes when you're dealing with quick new laws, it's like flying a plane and building that plane at the same time in the sky. So we're putting the pieces together as we go. So make sure that you're staying up to date on everything in this process. And even if the slides are posted, don't count on this exactly staying the same way for the indefinite future. So be empowered to keep yourself updated and educated on any changes in these different programs that are available to you.
So once again, Graham, thank you so much. And I will send out a link to our contact also of this recorded webinar so we can get this really valuable out to more people. And we appreciate your time and your expertise. So thank you.
Of course. Thank you guys.
Yeah.
Have a good
Yeah.
day, everyone. Stay healthy.
All right.
Thank you. Bye.
Bye-bye.
Bye.
Bye.
Is the host. He sets everything up now. It's all right. It's just for